This is Justin AMZN for Friday, September 20th, 2019. We had a big sell-off on Amazon, and it started way up here, which was right into the resistance we had from the previous day. From Thursday, you can see in the daily that we were trying to move back up and sold off. We tried to get back up there again, pretty much opening flat on the day. But essentially, I think it turned this into somewhat of an island reversal, and we're still below that here. We didn't get back up to that price. We gapped up. So, for a while here, we were sideways. Now we're starting to break down. We'll see if this continues into next week. But as for Friday, this formed a really nice even star reversal on a 3-minute. Let me switch to 3-minute real quick. This was an incredible candle way up here. A really nice high wave candle. Look at that. Oh, it's stuck. Sorry, still waiting. Okay, it's stuck for some reason. There it goes. Okay, so just trying to zoom in on this candle. Look at that. Incredible high wave candle. This is the kind of candle that you can just bracket trade. Go bearish below it, stop above, or vice versa. And then you have this Marbozu looking candle. Let's see, yeah, the high and low. Oh, a few cents off from a Marbozu. But that just broke down. Yeah, it took out the low of the day, retested, rolled over. If we switch back to the 5-minute, each time it pushed down a little bit, there were some bulls that came in trying to buy it. So you had a bit of a sell-off here. Some bulls came in right off of this line. Then it broke down again. Some bulls came in off of this line, broke down again, just randomly buying. So it wasn't just like it wasn't a huge flush lower until you got to this, which was, I guess, a tweet or something that rolled over from this price. But this was a great place to be looking for a rollover anyway, right into the 21, 5 bullish candles, even just anticipating, okay, we should have some selling. But to go from here around 1804 all the way down to below 1790, I mean, in a matter of 15 minutes, yeah, that would have been amazing to be in bearish at this point, or to still be in from up here and just trailing your stop all the way along. So you also had, so this is our uptrend line, and the top end has gotten above 1815, but the bottom, I mean, it was showing support here and then resistance here. It's just crazy how this keeps coming back into play. Not that I was looking for it to hit that value. I was just looking for this to get into 1800. And what's pretty incredible here is, depending on the option, and we'll look at a couple different puts. Calls we won't really look at because they don't really do much, but this is the 1800 put. And up until 10 o'clock Central, you could have still been buying this, or I guess 9:55. You could have still been buying this for $1. Absolute zero, buy for $1, stop at zero, or no stop essentially, and just set your target and just let it sit. Now that first push into 1800 happened here, right? 1035. 1035. Yep, that first push through 1800 happened right here. Great place to exit. Great place to take profit. Had you not, and just held. I mean, it never even came back to $1. It held above $1, which means you could have still been locking in $1 profit here, $1 profit here. But which would have been unfortunate had you done that, because that's when it just ran bearish, and the put just skyrocketed out of here. At this point, exiting anywhere up here would have been fantastic. Even setting a stop below anything in here would have still been a great place to exit. And this is, again, 1800 put. If you look at 1825 put, because we had that initial rally into the 1830s, this put came down to around $2. And some of these candles were like, this one was less than $1 range, less than $1 range. So maybe getting something set up like 250 by 150, or over here like 3 by 2. No, wait. That range, not 3 by 2. Sorry. Like 4 by 3, 5 by 4, something like that. Okay, then that got going. And then same thing, it pushed up into pushed through the 1800 price, meaning this was $25 in the money, which means the option is going to be more than 25. So going from even say 5 to 25, that's, that's 20 R to do that. Pulled back a little bit as it was hovering around the 1805 price, and then that moved so quickly that nobody was buying through these prices. It just all of a sudden jumped significantly. So yeah, can you imagine having bought around $2-3, something like this, and not even ending the day, just getting out at 40 something same day? I mean, that's what's possible on some of these crazy days where it's, quadruple witching and expiration Friday and everything going on with the options, that this is what's possible. So let's look at another one. So we've had a line at 1815 for a while. So let's look at how 1815 puts would have moved, or how they did move, and what you could have traded. So this, again, it was less than $1 for the first, or got below $1 for the first half hour or so of the day. Let's see. No, I guess first 25 minutes. I was actually looking for this to get below 50 and didn't get in at 58 or 60 or $1 or whatever, which was really frustrating that happened. Disappointed that I was holding out for a little bit more of a push. I was looking for it to, push up a little bit more from Thursday's high, and just didn't get there. And yeah, missed out on all that. But could have at any point in here gotten in at 2, at 3, at 4, on its way, running. But again, hit the high on the option as it's making a low in the stock around 1035, and could have gotten out at say 18, gotten in at 1, gotten out at 18 for a 17 R gain. Would have been phenomenal. Even the pullback, I mean, this was much more expensive. Pullback to about 11 was the low there, and then went on to run up into the 30s. So mainly what I wanted to focus on is what you could have been doing anywhere as it's moving in the direction. And this is where the market makers don't want to put the premium back into these options until it starts to look like, okay, it could keep going in that direction. And so, the 1815, it got to be at the money here, but for the first 25 minutes, it was going the other direction. It was way far away, not way far. It was going lower and relatively flat until it started to creep towards it. And so let's see, we got at the money at 935. That's crazy too. So at 935, we were at the money, and this option was worth 330 at the close of that price. We're in the money on Amazon, and the 1815 put is worth $3 and some change. That's ridiculously low. And to have all day to still go, sure, it could have reversed right there, could have bounced off of 1815. Let's see, no, 935 was this candle. So the close was, okay, 460. I was at the wrong one. Sorry, 930, not 935. Okay, that's a little better. But still, that price, the stock started to bounce a little bit, which means the option pulled back below 4. And you could have been getting into this one as it's rolling over, getting in 4x3 or 5x4 or something, and just ride that up to 18, 16, anything, go up to, get in at 5, get out at 15 for a 10R. And, it's just the way that it was moving. It just was really slow going in the direction of the puts, going in, for the puts to have more value. The calls were, here's calls, this 1800 calls, just collapsing. Went sideways for a while here, just collapsed. This was the only real opportunity to buy as this flash lower and trying to just get in on a bottom and buy back up. But it didn't get back into the money here. And so it didn't help it, inflate the price very much. Maybe you could have scalped an R going bullish, but after all day was going bearish. I mean, this candle on the call moved like $1 or less. It went from way down here to way up here, just a few dollars away from the money. This actually came up even closer to being at the money. And all of this from here to here maybe moved $1 or $2. So tough to trade bullish where it's got so much bearish momentum. And, you know, just go back through and study, you know, which option was the right time, which option could you have gotten into at the right time as it's moving in the direction, as it's showing you. I think the easiest one would have been the 1800 because it's further away. It's a nice round number, you know, so ignore that we've got a line at 1815. And, you know, this just stayed flat for so long and then popped. I mean, this still would have been great just buying absolute zero. You know, if you're not sure what to do with the options, you know, not sure where to get in, where to get out, you know, just do absolute zero, you know, so you don't have to worry about the stop. But yeah, everything just worked really well going bearish. Had you bought off of any bullish candles, pretty much it worked. The other one, if you, let's see, no, not even that one, because we were in the money for, or out of the money for a bit there. No, 1850. I guess the other line we've got is 1840. That came down to 11. That was close. 35. You know, just go through and look at how these moved. You know, 1830. You got out of the money for a little bit there. The low is around $4. 1810. Excuse me. 1810 was another one where, you know, it's not quite as far away as 1800. If you think it's going to hit 1800, then it should be $10 in the money, which was past that. Here's $10, but still had a low under $1 for a while, you know, and then just grind it up. This one would have been probably a really good one to get into. Still nice volume. You know I usually like sticking with the nice round numbers or a line that we've got. So 1815, 1800. I think the clearest one to be trading was 1800. And even, you know, as it moved from the previous day, it was just so flat through here. We're so far out of the money. It dropped more. It was out of the money. I mean, let's just imagine that you were, you know, buying at $20 and you bought 5 of them because you could with anticipation. It should move towards 1800. And then to see it get into the money, you would have turned $20 into $600 in a matter of, you know, a couple hours. So that's the possibility. That's the potential. You know, obviously you're buying something at a low here, calling a top, but even if you don't, this price, you know, around $50, you could have gotten 2 of these, $50, flipped them both out for 600, or flipped one out at 600, but more down here when it came down to 200, right before it just catapulted higher. So a lot of different opportunities, a lot of different ways to play it with different options, getting out, getting back in, and we'll see if this does any more rolling over. This is consolidated for a while. It looked like it was breaking out. Now it's pulled back. Could this be, you know, an S curve here? Or is this more of an S curve this way? We're rolling down some more. I would not be surprised if we continue Monday, Tuesday, come down to 1747. I would not be surprised at all if that were to happen. This is a lot of bearish volume. It's similar volume, actually more volume than this candle, which came down into this support. So a lot of bulls are trapped from the last 3 days. This looks like bookends on, you know, like a rest after battle, or what's it, a rising 3, something like that, where it could totally continue lower. So be careful to be bullish. You know, it's still overall in an uptrend, but it could be pulling back some more. And then we have this sort of island reversal here to contend with. You can see with where the 5-minute ended up after hours, it's pushing back down to 1780 already, which was basically the low. The low was 1780 and 92 cents. So we're right back down there after hours. What's interesting about that price, it's right at basically 1781. Well, that is 50% right in between this pivot and this pivot. So where we're going to go from here, we could easily continue down the rest of the other 50%, or we could bounce right there and run up. You know, if you think of fibs and where those levels are at, We've taken out bulls through here. Bears look like they're right. If we get some sort of rally, this is a great place for it to happen. But be careful, be cautious, and we'll look for what we can see in the 5 minute, how it's going to move, and going sideways for more, another couple days, couple weeks. I mean, isn't out of the question either. I mean, this has been, let's see, August, this has been a month and a half of sideways in this range, a really large range. Um, it's not like we dipped down and rallied back out of it like we did here. This whole sideways action looks similar enough to what was going on through here. And we had some directional things, or it looked like we were going to have some directional moves that, that didn't work. We had earnings where we had a lot of bullishness come in, and then, gapping back down after earnings, and some high volume days. We're seeing that this is the largest volume we've had over the last like 3 weeks here. And so we just want to be careful that we're going to continue in this direction. We've taken out the lows, so look for a little bit of a retest for it to roll over on a 5 minute if it's going to continue bearish. But set your stop in the right place so that you get stopped out if it does start to go bullish, and then just flip it and be ready to go in that direction. And if you get stopped out in both directions, then it means it's going sideways for a little longer too. So hope that helps. Hope that makes sense of what to look for on the calls, which we don't really talk about too much. On the puts especially, what put, what strike, and you can always go out another week expiration and be a little further out of the money. And that's always a possibility too. I'm always looking at the front week, whatever this Friday's expiration is, just because it can give you the best return. But you got to set the risk appropriately too. So again, hope this helps. This is just an AMZN. Thanks.